Good evening and welcome to the ShadowTrader Video Weekly for Sunday, June 17th, 2018. I'd also like to wish a happy Father's Day to all fathers out there who may be watching this video. Hopefully you are spending some quality time with your children today. The title of this video is Won't Get Fooled Again because it references a dynamic between the S&P and the NASDAQ that occurred a couple of weeks ago, which is actually repeating itself today. This video is being recorded on Friday, June 15th at about 1 p.m. Eastern. And currently, if we look at what's going on in the SPY, there was an ugly gap down this morning in the S&P. S&P is currently down 8. And here's the candle right here as it's forming. Again, this is just a developing bar. And the reason I called this Won't Get Fooled Again is because if you recall, there was this balance area here where the market broke out of balance right here, right? And that was actually on 529. There was this breakout of balance which made it appear that the balance was resolving itself to the downside, but in reality it was kicking off a very large rally. And what had fooled me was that I was not paying close enough attention to the NASDAQ because the QQQ on the exact same date, which is 529, actually made this bar, and as you can see, that's well above its bottom of the channel, basically, for lack of a better term, for bottom of the balance area, I should say. And that also sparked the same exact rally in the NASDAQ. So today, on July 15th, if you notice, here's the SPY on the ugly gap down. And notice where, I'm going to, before I get into, show you the QQQ, look at where the SPY is in relation to the 20 MA, or rather where it is in relation to the range, right? Here's the 4-day balance range, and here's this here, correct? And notice that the low here went almost to the 20 MA. And then look at the Qs. The Qs have this gigantic distance between where they are in the 20 MA. And notice that in the current bar, there is no gap. It's actually inside of Thursday's range. So there's the relative strength again, where the market is sort of drawing people's attention, I think, to the S&P, which has this much more bearish looking bar, and yet the NASDAQ is actually not moving any, which tells me that the rally is probably going to continue. For next week, or maybe even later today, I'll put this video out as soon as possible, but look at this 15-minute chart of the S&P, and you tell me where you think the long entry would be. It makes a lot of sense, right? For the gap fill, I would say up into here. And the Spider is probably going to move from about 276.50 up to 279 at some point to fill the gap. Market profile is showing basically the same thing, obviously, but I wanted to show it so you can see the actual balance area. And here, this is actually quite noteworthy, where we have some overnight sessions, 2 in a row actually, that broke us out of balance. Notice the overnight session here, so this is Thursday night, this is Wednesday night. Here's the 4-day balance area. Note that value is absolutely equal, so you have unchanging value in a 4-day balance. Mark off this section here for next week. It's important. It's the 2796 area. I've noted it here as the balance high, 2796.00. Notice that it is a double top from one RTH session and one overnight session. I do give a little bit of import to that. It would be a lot more important if it was 2 back-to-back RTH sessions, but I do pay attention when the futures back off in the overnight session at the exact same level. And again, I'm also paying attention to this double bottom area of these 2 overnight sessions. And what's more important about it, what kind of gives it even more import, is the fact that one could consider that these were look belows and fails, breaking you out of the 4-day balance, and then the regular trading hour stayed in. But even more powerful is the fact that the Friday action is a bottoming tail here, excess low. You can see that the volume kind of tapers here, right? I'll make it even bigger so you can see taper on the volume to the downside. Right? Look at that. And at the same time, even more importantly, where are prices now threatening to move back into balance and rejecting the lows that were made here in these overnight sessions. It absolutely just did not work. You had 2 overnight sessions here and sellers just couldn't get it lower. What are the balance rules and how does this work? Remember, look below and fail targets the other side of balance. So keep that in mind. So if that setup occurs later today on Friday or into next week, that gap fill is going to take you back up there. Why? Because when you look below balance and fail, you target the other side of balance, and doing so, remember, you've got these highs here that are poor and they need to be repaired. Notice that there's no excess here on the high. What does that tell you? That the up auction is probably not over. Generally, the market won't end a move on a poor high like that without excess. Okay, let's get into some trade ideas. I got 5 doozies, I think, for you that I think you'll enjoy. First one is Twitter. This has been off to the races for a while, but I thought it was worth pointing out because the first pullback is always buyable. There's been some good news on the stock. People are seeming to like this name. It was in the dumps for a long time, and now it's really popular. And notice you're very extended from the 20 MA, but there has not been a pullback yet. So put a Fibonacci on it. The first pullback will be buyable. If you look at the weekly, it's completely in the clear. Look at the monthly. It's also pretty much in the clear until here, until about 53. So at some point, I think you're going to see pullback in the stock that's going to be viable because the first pullback after huge moves always is. And traders are probably going to take the stock a little bit higher up to that 53 level. All right, let's take a look at win in the gambling space. So this is a possibility of a look below and fail. And here's your balance area low. And this is classic H pattern. Classic letter H. And what happens with the letter H? The letter H stands for hell for short sellers. That's something I just kind of made up on the spot, but I think it's a good one. H stands for the hell that it puts short sellers into when they kind of stupidly short this pattern. When you see the H, and what do? They go short right here, and it doesn't work. And then all of a sudden, the stock goes up here, and it finds acceptance actually back inside of range, and then it's like, boom. It just takes off to the upside. So I like win to the upside for next week. Tesla is ripping here. This is nothing but short covering. I'm totally in the camp that I think the stock is crap. I think the company's crap. I think they make beautiful products, but they are burning cash at a really fast rate. But the market does not care about that. And short selling is the most powerful thing in the world. Some really smart guy, I can't remember his name, he had funny hair, I think he was from Germany, he said that it was compound interest was the most powerful thing in the world, but I disagree. I think the most powerful thing in the world is short covering by nervous shorts. Remember, it's always a market order. Very rarely is it a limit order. I think the stock is going to 400. All right, next item up for bids is ISRG. This has been struggling at the same level. I'm going to show you the hourly chart here. 20-day hourly, where are you? Hourly chart here, this has been struggling at the exact same level for a while. It's the 493, 494, 495. Maybe it touches 496, same thing. Why am I bringing this up? Because when a stock consolidates ahead of what you believe is the target, and the target is obvious here, the target is the big 500 number, usually that number is not going to be the resistant area, and the stock is probably going to go much higher. So watch for this probably not to stop at 500 and actually break. And last but not least, I'll leave you with kind of a touristy name that everybody knows. Apple is pulling in a bit, but remember, it's got that $1 trillion valuation somewhere just above the 200 area up in here. I would like to see this hold this support in this area in the high 180s, and then do a turnaround play that's going to bring it back here. I think the stock is possibly just showing us that it could be range bound like this ahead of earnings, but we shall see. All right, last but not least, an announcement. I am taking a little bit of time off. I will be away from my desk for the next couple of weeks. I'm recording this video early purposely, which is going to be sent out on Friday afternoon, at least sent out to Twitter. You'll get it via email a little bit later. I will be back on the desk on July 2nd, which is also going to be taking us into earnings season. Remember, Q2 is going to officially end at the end of June, and then we're going to ramp probably into earnings. We're going to start seeing jumbotrons in the third week of July, etc., and that should be exciting. So we'll see what kind of market we bring going into that earnings season. But for now, overall, looks to me bullish. I think we may be entering into a pretty bullish phase for the summer and fall. I'm seeing a lot of the news-driven items being shrugged off. Lots of stuff going on, coming out of Washington, tariffs, North Korea, etc. Market does not seem to care. So this earnings season could be interesting, and I think we see the market a bit higher. All right, on behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading, happy Father's Day, and good night.